A million seconds is about 11 days. A billion seconds takes us back 32 years. But to count 1 trillion seconds, we have to rewind 31,000 years, long before the first human civilizations even existed. Yet one man's net worth has crossed that exact threshold. Elon Musk holds more wealth than the founders of Google, Amazon, Oracle, and Facebook combined. This mathematical anomaly crystallized on June 12, 2026. Within seconds of his rocket company, SpaceX, listing on the New York Stock Exchange, Musk was crowned the world's first trillionaire. But there's a serious flaw in the math. Look at this comparison of SpaceX's financials. On the left is the company's valuation, a towering $2.2 trillion. On the right is its actual performance, a devastating $5 billion operating loss recorded last year. This trillionaire status has no backing in actual profits or a vault full of cash. It is a fragile paper wealth masking a highly unstable economic reality. Musk himself has admitted his actual cash on hand is around 0.1%. The vast majority of his net worth is locked inside his 38% stake in SpaceX and his shares in Tesla. If he actually tried to withdraw that $1 trillion, he'd have to sell those shares. But dumping that much stock into the market all at once would trigger an immediate, massive crash in the share price. Investors closely watch founder behavior. Seeing a CEO dump millions of shares signals to the public that the company is in trouble, causing everyone else to panic and pull their money out too. This unimaginable wealth is a hypothetical number blinking on a screen, completely dependent on maintaining the public's perception of value. Economist Burton Malkiel separates stock valuation into 2 categories. There's the firm foundation theory, where a company's worth is based on hard profits. And then there's the castles in the air theory, where value is driven entirely by the dreams you can sell. Musk relies on the castles in the air approach. His empire thrives by selling the public a hyper-futuristic utopia and convincing investors to fund that vision rather than the reality on the ground. Consider the Hyperloop. In 2013, Musk promised a transport system that would shoot passengers from New York to Boston in 30 minutes. It never materialized. By 2023, the project was quietly shut down, leaving behind nothing but a defunct test tube in the desert. Then there's Tesla's full self-driving. He claimed cars would have fully autonomous capabilities by 2018. Over a decade later, drivers are still waiting for a finished product. And in 2014, he gave a 10-year timeline for sending humans to colonize Mars. That deadline has come and gone, with zero realistic progress toward human settlement. People aren't pouring money into these companies because of solid economics. They are paying dues to a financial cult where science fiction obscures the actual balance sheets. If Musk takes no official salary and holds almost zero cash, we have to ask how he affords a lavish lifestyle and massive acquisitions like a $44 billion social media platform. This strategy is known as buy, borrow, die. It starts with the buy and hold phase. The wealthy hoard their shares because taxes are only triggered when those shares are sold for income. Keeping them locked in a portfolio generates zero tax liability. Instead of selling, they mortgage those massive stock portfolios to banks. In return, they get huge cash loans at incredibly low interest rates. Since a loan isn't classified as income, that cash is completely tax-free. Finally, the die phase. When they pass away, these inflated shares transfer to their heirs. Under current rules, this inherited wealth sidesteps capital gains taxes entirely, completing a lifetime loop of zero contribution. Between 2014 and 2018, Musk's wealth surged by nearly $14 billion. Yet he paid an effective tax rate of just 3.2%. A typical working-class citizen pays between 20 and 30%. Billionaires often use the $1 salary as a PR stunt, but it is actually an aggressive financial maneuver designed to shift the tax burden onto the working class. To prevent this fragile bubble from bursting, Musk needed leverage over the rulemakers. In the 2024 election cycle, he funneled $290 million into Donald Trump's presidential campaign. The return on that investment was immediate. Shortly after the inauguration, Trump met with India's Prime Minister Narendra Modi. Within weeks, national security conditions keeping Musk's Starlink out of the Indian market were suddenly dropped. Musk then successfully pressured the SEC and NASDAQ to rewrite the fast entry rule, eliminating the standard waiting period for SpaceX's initial public offering.
This regulatory bypass forced $70 billion of average Americans' retirement savings in pension funds into a speculative venture, leaving those funds completely exposed to Musk's risky company. State-sponsored cronyism, rather than pure engineering innovation, ultimately secured Musk's trillion-dollar status. Hoarding this level of untaxed wealth has real human consequences. The United Nations World Food Program calculated that $40 billion could eliminate world hunger by the year 2030. Musk publicly challenged WFP Director David Beasley to produce an exact roadmap of how that money would be spent. Beasley delivered the plan, but Musk never responded. Look at this balance scale. Oxfam analysis shows that taking just 10% of one man's hoarded wealth would be enough to lift 800 million human beings out of extreme poverty. When the system gambles with your retirement savings and bypasses food security roadmap just to support a speculative bubble, the risk is no longer theoretical. Guard your own finances against the gravity of these hype-driven cults. History remembers what is built for humanity, not the digits on a balance sheet. Developing your own practical skills offers a security that paper empires simply cannot match.